Hi, everyone. It's Live with Main Street. Jim Ludwig and
Anna Srigunina. Hi, everyone. Hi, Jim.
Well, guess where I am today, Anna?
Interesting place, Jim. Looks like a train station.
Yes, and what does that sign say right behind me?
Trains. Should I tell everyone where you're at, or let them guess?
I'm broadcasting from Union Station in Washington, D.C.
There you go.
There you go.
I knew it was not at Penn Station in New York. Good. Well, Jim, we've got an exciting topic today. We're talking about year-end planning. And some of our listeners might be wondering, well, you guys, it's only November. Why are we talking about that? Well, we are planners, right? And so we want to give everyone enough time to get ready for a really good closing 2017 and get yourself a good start for 2018. So we've got a couple of tips and suggestions, and we're going to go through those. And if you have follow-up questions, let us know. But here's what we've got so far on our mind. Now, there are some what I call year-round financial to-dos that you could pretty much do at any time of the year. So we're going to address those first because I want this to be a reminder. And then there are obviously some sort of year-end specific to-dos and actionable items that we're going to discuss with you as well, because guess what? You still have time. It's only the beginning of November. I know the holidays are coming, but all of this, if you prepared ahead of time, I know you can do it. So, Jim, here are a couple of year-round to-dos, and feel free to comment and add on those. Now, we had a big example of where check-in credit report becomes a very important task because of the Equifax data breach. Do we have any suggestions and comments there, aside from just making sure you check your report once a year?
Well, Anna, I would add check it 3 times a year, because you get a free credit report from each of the 3 big organizations, TransUnion, Equifax, and what's the other one?
TransUnion, Equifax, and I'm blanking.
Starts with another E.
No. Yes. Anyway.
Experian. It's Experian. I knew.
Yes.
It's TEE, if you want to remember that. Anyway, I put it on my calendar for every 4 months to get my free report. And it's important to check for those companies, because the bad guys open little accounts and then they open a big account and they're gone. Right.
Okay. Well, number 2 year-round to do is making sure you have a spending plan, right? Making sure that you're staying on the top of it, because we get to, even us financial planners get carried away with all kinds of things, but coming back to it and making sure that you are on track, because that's one of the simple things you can do, which could lead to a lot of bigger steps and help you get there faster. So there are a couple ways you can do that. Manual spending plans actually do still work if you're tracking your spending that way. Both Jim and I like passive tools. We both use mint.com. At least I do. I still do. I have for the last 6-7 years, how long they've been around. So that's helping me with the passive tracking of my spending. Jim, you have a comment here?
Well, I like to think of, I get to have a reward if I can save some money someplace else, and then I can go look at my little bucket list of things that I want to buy, but I haven't really had the money. But if I can save something with a big coupon, or I can, a couple of months ago, I put in a new air conditioner in my house, and it cut my electric bill, at least for the first couple of months when it was warm, by almost 60%. So it went from like 150 down to 65. So although I spent $6,000 on it, but my budget is really spending is really recognizing that. I haven't bought anything else, but I'm thinking about it.
Yes, I like your suggestion, the reward system. Somehow, I think many of us are still attracted to that. We have credit cards where we collect miles or points. So those are rewards. Well, good. Okay. Now, tip number 3 for the year-round planning tools is simplifying your financial records. Now, we see this all the time with our clients who are coming to see us, whether they're here for the first time or 10th time, it is always an issue as far as where our records are at. So why not streamline things like online statements, right, Joe, so that you're not getting a whole bunch of mail, unless you have to, unless your system of keeping records is still in the box, right? That's fine, but have a system. Don't just have envelopes lying around. Number two is, can you set up direct deposits to make sure direct deposits and auto savings, like Jim talked about having specific savings goals, can that be all streamlined and automated? Same thing goes for paying your bills, right? I think these days you can almost forget about writing checks, or maybe writing a few checks a month, because all of that can be set up on auto deposit, auto pay. Auto is the word. So, but you've got to have a system where you can check. So don't think that I'm saying just set everything and forget. No, set it up and have a system to be able to come back and check. Jim, anything to add here?
Yes, Anna, in preparation for my estate planning, which we'll talk about later, I thought that I had everything set up online so my son, who is a CPA, certified public accountant, could find everything very easy. And guess what? He pointed out that I didn't have everything. Even though he had my passwords, it would take a long time. So I put everything on a Google Drive and gave him a link to all my statements and documents there. So even remotely, he can see what's going on. I can see it too, but putting everything in one spot electronically is very efficient if someone has to take over on your behalf.
I like that suggestion, like a specific type of vault you can share with your family. Right, good. Well, until you get there to sharing with your family, I think getting your things organized would be a very first step. Now, we still have a couple of months, exactly about 2 months left in 2017. Let's talk about some of the actionable items we have as far as suggestions of what we all can do to close out 2017 on a good note. So what do we have in mind, Jim?
Well, the first thing we have to do is look at our investments, and maybe we rebalance, or in taxable accounts, we look to see if we have any losses that we can recognize. That means we have to sell them. We can't buy them back for 30 days, but that loss can shelter other gains or $3,000 worth of ordinary income. And that's one thing we don't want to forget about, because once January 1st comes, we've lost the opportunity to tax loss harvest.
Harvesting, yes, great idea. Rebalancing and tax loss harvesting. Now, for clients who are 70 and a half and older, I want to send this reminder to you is not to forget to take your RMDs. These are required minimum distributions that you are supposed to do or take from your retirement accounts, such as IRA, 401k, or 3B. So all those deferred accounts where you've been saving for retirement, the money has to come out. So, and if you don't, it has to be done before December 31st. And then there's some other rules. I'm not going to get into too much details, because particular if this is the first year you do and you have some extension. But the very simple thing to remember, if you don't take it out, there's a 50% penalty. So I think that should be incentive for you to act on it in time. So,
and Anna,
yes.
Anna, I would point out, if you're born in 1946 or 1947, send us an email and we can tell you exactly when you have to take those required minimum distributions.
Oh, good.
Because there is a delay the first time. But 1946 and 1947 people need to get a hold of us to make sure they don't screw it up.
Good. Okay. Yes. Good reminder. I like that. Now, one of the things I want to also point out is the least favorable thing, I think, for all of our clients, but actually making sure you have an estate plan, or if you had an estate plan done in a while, is it time to review it? So this is just a general reminder. Has your life changed? Have you moved? Have you gone through a life transition? Having kids, getting divorced, getting married, buying a house, all those kinds of things is what's prompting us to think about perhaps your estate plan needs a visit. Okay, and Jim mentioned that too, as far as part of the estate planning and thinking, down the road, is sharing that information with your loved ones so that if something does go wrong, they can get a hold of it. Now, I also wanted to remind you all, last month we all focused on open enrollment, and that's the time of the year where companies provide a new set of benefits or refreshed set of benefits to their employees, and so that you can prepare and pick and choose everything for next year. So November is still the time to do it. So look at what you've got, figure out if there's changes that you anticipate for 2018, review your benefits. Let us know if you have questions. We had quite a few questions around that topic, but you still have time. And then the other piece on that is, for those of you who have to enroll individually in health insurance, that deadline is December 15th. So if you're revisiting your plan or thinking about changing it, you've got to make those selections by December 15th. Otherwise, it's not going to start on January 1st. So that's my open enrollment comments. Jim, you got something to add?
Yes, there was a posting in one of the sites that I frequently review about if you're an individual, maybe becoming a LLC or subchapter S company, and you might qualify for a small group plan, even if you're solo. I didn't have a chance to check it out in more detail, but it was a credible source, and it's something that you should talk with your tax advisor about, because it means more tax returns and things like that. But if there's significant savings on a healthcare benefit, it might be worth your while to look at the entity that you're working for as a solo person.
Okay, well, that's a great suggestion. Got it. Okay, well, the last thought I have is start thinking about 2018, right? In terms of what do you want that year to be like, right? And I personally tend to take December, the last couple of weeks of December, to not only plan as far as business activities, but other personal things, right? Are you planning vacations for next year? Are you planning to move? Having family, all those life transitions, and think ahead, because finances, fortunately, I tied in really closely to everything we do. So can we anticipate, can we prepare better? Because that's gonna get you faster to where you're going if you have a plan. So that's my last closing point. Jim, anything else on your end?
Well, it's important to think about anything on your tax return that has to be done by December 31st. Opening an account is usually necessary, like for a solo 401k or a SEP IRA. You have to do it by December 31st, although you can fund it later when your tax return is due. So those are the kinds of things that you should be talking to your tax preparer about to make sure you don't miss those kind of deadlines.
Yes, and also I think we forgot to mention that if you're still planning to contribute to your retirement accounts this year, right, aside from the SEP IRA, the regular IRA, because we have time, like the 401k type of accounts, you've got to do it before the year ends. So if you're really wanting to benefit from reducing your income in 2017, you've got to do it by December 31st. So it may be rough, a couple of months as far as your pay going down, but if that's the result you want, reducing your taxable income, and it makes financial sense, then consider doing that. Well, awesome, Jim. I think that these are all the tips we've got. I want to wish everybody a very happy Thanksgiving. We're going to be back here in December. The holidays are officially starting. So yes, all my thanks to you. And then if you guys have questions about anything that we discussed or we haven't discussed, please let us know. Jim, safe travels. Have fun at the station, and we'll be back next month.
Okay, thank you, everybody.